Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on XLK Apple Facebook daily weekly time frame. So XLK rejecting from the daily middle Bollinger Band on the back test, and ever since we've lost this resistance, we've back tested it, lost this support, we've back tested it a couple times and rejected. So the bears are still in control as of right now, and we have a very, very key support level of 52.33. It's currently a double bottom. If we break this level, I do believe it will be a catalyst for another leg to the downside in the overall market, as the tech sector has been one of the saving graces for the S&P 500 bulls, as it has done a good job holding up overall, especially compared to the financial sector. But we now have a lower high in place. That's at 53.11, and we saw a little bit of weakness today. So we're going to be watching the lows of the last couple of days. We have higher lows 3 days in a row. So looking at 52.70, 52.63, 52.53, and then on down to that key 52.33 must hold level. So that's the level to be watching right now. The bulls still have a decent amount of wiggle room before we were to break that level. And on the weekly time frame, we can see that even though we did close just below those exponential supports last week, the bulls are trying to recover them. Not seeing an entirely strong candlestick this week, but certainly not seeing follow through to the downside after a bearish end to last week. So we are seeing a bearish MACD cross. That's not enough to head to the downside from here. In my opinion, it's all about 52.33. If you're watching the tech sector and individual tech names, that number is tattooed on your forehead. Apple on the daily time frame seeing further weakness, and we got a bearish break with a break of this tight range of volatility. So the key support we were watching was the low of the last 4 days of 140.87, and we did break that level, so we're now looking down at 140.06. That was the level that we hit, and it's the lowest price we've seen in about 3-4 weeks. So 140.06 is support. We've been riding down and driving down from this exponential resistance on the daily time frame over the past 6 days. So that is a clear resistance level that the bears are in control of currently, and we closed near the low of the day with a little uptick in volume. So the bears do have control on Apple in the short term. After 140.06, we're looking at the 50-day moving average, which is lining up above 138.62, the next higher low of consolidation that we have on the daily time frame. The weekly chart, another red week, still holding exponential support, but we're closing in on a bearish MACD cross, potentially losing the 8-period exponential moving average support, which is held for so long. That's at 139.55. But there's no denying the last 2 weeks the bears have been in control. But considering overall where we are coming from, this is not a dump. And if you are a long-term bull on Apple, there is really nothing that you're currently concerned about. This is normal, healthy consolidation. And again, I keep saying it, we could pull all the way back down to 130 and still be extremely strong on the weekly time frame. Facebook bulls are in full control, so you can see the big difference between the two. Big time move to the upside, and we're only looking at the all-time high. We topped out at 143.04, and 143.44 is the all-time high. We rejected from the upper Bollinger Band resistance on that all-time high, and today we rejected just below that level. So that Bollinger Band is trading pretty much straight across. We needed to expand to the upside and widen out. And with that upper wick showing some profit taking, not a weak close, but we do have very clear resistance at the 143.04 level. Bulls are definitely in control, and we can see the strength that we've come off of. The low of last week was down here at 138.81, and here we are on Apple right at the low of last week. So a big difference between those two names. And on the weekly time frame, 2 weeks of consolidation looking like a little bull flag as we're now heading up for continuation. So today was a pretty big day for separating these two names and not really seeing the strong correlation between the two. Facebook's been doing its own thing the past couple of days, and it's certainly been favoring the bulls. So we'll keep an eye on all of this. 32.33 is the level on XLK to be watching. Make that 52.33, but you didn't forget that. You've got that tattooed on your forehead. I'll see you tomorrow. Thanks for watching.